Hello and welcome back to Katie's Business Tips. Michael Lapede here to talk to you today about self-employment income. Specifically, when must you start reporting that income and when can you start deducting expenses. Now, if you're self-employed, you must report all your income. And if you fail to ever report income in the last, now or in the last 3 years, you're going to have to pay a 10% penalty on any income you fail to report. Okay, so that's if you're a first omission. Now it can get worse. So here's the thing. Once you start your business, you start reporting that income. Very simple. And you can start deducting expenses. Now, this is considered outside of what's called startup expenses. So if you had expenses before you started earning income, before you started the business, to start the business, you had to gain some knowledge and go to school. You had to acquire some assets. You had to prepare, incorporate, or whatever. This is self-employment more. But at the end of the day, you can do startup expenses. And then, of course, once the business is running, you can deduct expenses. Income cannot be incurred, though, until you start the business. The moment you start earning income, you've started the business and you must start reporting the income, okay? Now, doing research in hopes of going into a business is not considered significant activity. So a lot of people say, well, I was researching, I was considering the business. That is not enough. Now, in the case where you research the business and you do the business, okay, there's a chance you could probably deduct that. We'd have to have that discussion. But in most cases, researching what business you want to get into is not tax deductible unless it's research for the specific business that you've already decided to get into. Okay, so that's very important. Now, if you're buying goods for resale or equipment to start your business, to be considered starting point of your business. Okay, so if you bought something that you're going to resell already or bought equipment that specifically pertains to the business, they can also consider, well, you started your business. And again, startup expenses can be deducted anyway, but if you have stuff that's going to earn you income right now, your business can be started. Now, if you're incorporating, then it doesn't really start till you incorporate. But if you're just self-employed, sole proprietorship, then it starts the moment you decide to start the business, say, I'm doing it, or when you make income, or when you buy those assets or things that are going to earn you the income, you've technically started the business, okay? In the next video, we'll talk about how to report self-employment income, but if you got any questions, we'd love to hear from you. Post in the comments below. Thanks for being a part of our business tips, and we'll see you in the next video.